Hey, what's happening, guys? Dan Dario here with another Options and Play video update. Uh, First off, I want to say thanks to those of you that stuck around yesterday for our options session, and it was it was definitely a busy session. We talked about a lot of things. One of the main focuses last night, and by design, is we talked a lot about like the upcoming earnings season because it kicks off next week. So a little bit of what's expected, what to look out for, kind of like how to like play like the open and position during the day. So if you weren't able to make it, check that out. If you have any questions, feel free to reach out, send me a message, and I can like walk through maybe some of like the thinking behind, um, or at least maybe some of like the early thinking behind this upcoming quarter. All right. Um, One of the other things we spoke about, and one of the things we pretty much always speak about, is what's going on in the market. And what was interesting yesterday is that we spent a lot of time, and I really, really wanted to highlight how important this 200-day, 100-day cluster zone has turned into. So for me, I was saying at the time, I was like, I'm waiting. I want to wait. I want to wait. I want to make sure that we're actually going to break through because this is such like a big level that I don't really want to try to anticipate a break because it hasn't dictated that it's ready to go, or it hasn't done it yet this year, right? I mean, when the Qs lost the 200-day, failed on the first bounce, failed on the second bounce, failed on the third bounce, and now you had yesterday's move, which put it basically right at it, right? So that's the line in the sand. I mean, to me, it's extremely clear that this is the line in the sand. This 200-day, 100-day, the 100-day is basically right at it now as well. So this is the line in the sand moving forward. The longer we remain below it, probably the greater the likelihood is that we have a deeper pullback. Okay, because it's turned into a pretty significant area of resistance. To me, that's very clear, right? Failed here, failed here, failed here, and now it's failed here again. Um, in terms of where we could correct to, well, underneath the 8 EMA, which it looks like we might be finishing underneath, there's a path down to like the 340s, mid to high 340s, and then depending on what the news is at the time and what's going on in the world at the time and going on in the market at the time, I mean, it could be even further. So this is a significant pivot point. This is a very significant spot on the chart, and there's a chance that there could be a resolution one way or the other within the next 2 weeks. Couple things to watch. Tomorrow, Fed minutes. All right. So people were a little bit more spooked in tech land today with the rising yields. So we're going to get some commentary out of the Fed, out of their last meeting, about maybe like their expectations going forward. So you got the Fed minutes tomorrow. Couple things next week. Big Tuesday CPI. All right, so the CPI readings are huge. They are like one of the primary focuses of the Fed. Next week we get the CPI reading, and that's going to be a pretty big event for the overall market. All right. Also, next week is when earnings season kicks off, and you got the banks. Now they're not as big of weights as tech, right? But they are significant, and they could really kind of give an idea of some of these bank CEOs can talk about what their expectations are rate wise for this year, but also consumer like lending and spending, right? Could get some credit card metrics, so like they're important, even if the stocks themselves aren't like super volatile and maybe aren't as important as some of the big tech names. It definitely can kind of influence sentiment a bit, right? And that could impact the overall market too. So we got a couple big things, or a few big things coming up, which kind of lines up with like a pretty major technical spot on the chart. And I feel like we're setting up for kind of like a pivotal 2 week stretch here. All right. If the Qs do break above this level, 380s, right? I mean, maybe a little bit past that. I mean, it's less well defined. I mean, we could have room into like the 380s relatively quickly, actually. I mean, it depends on the reason that's driving us higher, and what's like the momentum, and if the numbers are good, right, earnings wise. So I feel like there's like a 15-20 point move that's brewing here, but it really is going to depend on how the next couple weeks go. So that's what I'm looking at. That's one of the things we spent some time talking about. Also, if you're looking at a bunch of swing trades, I still feel like this is kind of the line in the sand. Like if we can get above it, then that's going to shift like the mix to more bullish. If we continue to chop around and hold below it, then I still want to be more balanced. Like I want to have some shorts on, I want to have some longs on, right? Because we could really have like a pretty good move either way out of this pattern. So food for thought. I wanted to put that out there on your radar, walk through it a little bit. So let me know what you think. All right. If you like this video and you're looking for more information about trading events or swing trading with options, please follow up with the link in the description of the video for more information on options to play. Have a great night, stay well, and I'll talk to you